Thank you all for being here with us today. So we're going to talk about a number of amendments to Serbian tax legislation that were part of the new budgetary package for 2022. Some of these measures, I will indicate which, actually came into force as of 1st of January and became applicable as of 1st of January. Some will start to be applied as of 1st of March 2022, but we will discuss this in detail later on. So essentially, what we will be talking about is one change within the Serbian corporate income tax law. In this budgetary package, the focus was on personal income tax law and the mandatory social security contributions law, where we have a number of changes through which we will go in detail. But all of these changes actually are a part of a more broader drive to reform Serbian tax legislation and actually to stimulate the knowledge-based economy transformation that we actually need for accelerated growth. So what I will now do is remind you that since 2019, actually there were broad incentives introduced at the level of corporate income taxation, essentially two main incentives. One is the double R&D deduction, wherein every dinar invested into research and development by a Serbian legal entity is for corporate income tax purposes treated as 2 dinars. So we have a double R&D deduction. At the same time, an IP box regime was introduced, which effectively means that if you are able to create valuable intellectual property by virtue of this already stimulated research and development, the income generated by on the basis of this intellectual property is taxable in Serbia at a lower effective 3% corporate income tax rate, where instead of the general 15% one, and we get to this by exempting 80% of IP income from taxation, qualified IP income from taxation. Both measures are fully in line with the BEPS Action 5 requirements and apply to Serbian created and Serbian owned IP. When I say Serbian owned, I mean held by Serbian incorporated legal entities without any regard given to the ownership of those legal entities. So those owned by foreign entities can also use these incentives. In addition to this, what was already noted in the past is that what we are suffering a lot from is the brain drain issue and the problem of immigration, just like many countries in especially Southern and Eastern Europe are. So we introduced in the past some measures which were targeting specifically repatriates and the employment of qualified foreigners by Serbian entities. So trying to provide a more competitive edge for Serbian employers who are seeking to find talent elsewhere outside of Serbia and trying to bring it into Serbia. So what we've done at that point in time is this is already on the books. It's a incentive which can be used and is being used. So if you have a high qualified and proving whether or not the individual is highly qualified is quite easy. If you have a high qualified employee who did not reside in Serbia for the last 2 years, and in the case of young LLM and doctoral student graduates for just 1 year, you get, and this individual comes to live in Serbia, to settle permanently in Serbia, and is employed by a Serbian employer. This person can use, and his employer or her employer also can use, benefit from a 70% exemption from payment of salary tax and mandatory social security contributions for a period of 5 years. This measure is in line with the so-called Dutch 30% ruling system, although in the Netherlands you get a 30 instead of a 70% exemption, and is similar to the exemption mechanism introduced in the same years as Serbia, the one in Portugal, although in Portugal the exemption is 50% as opposed to the 70% that you get in Serbia. So ours is far more beneficial. Now, that being said, Serbia also did quite serious steps, took quite serious steps to tackle the problem of bogus self-employment, of what is also called Uber-like employment. So there was an independence test introduced, which quite successfully dealt with this issue, followed by a 3-year transition regime. The transition for those companies who were heavily reliant on this model for engaging personnel. So essentially, there were quite broad measures introduced in this respect. Now, for this year, there's been a very significant package at the level of personal income taxation. You will see primarily targeting talent retention in Serbia and trying to make the qualified people stay in Serbia and making Serbian employers have a more competitive edge when trying to keep and engage talent here in Serbia. Now, as for the measure that have been introduced from the perspective of the corporate income tax law, basically the problem that we were dealing with here in Serbia and that we are dealing with is that for the development of the knowledge-based economy, what you need is essentially the capability to easily incorporate and restructure intellectual property. Now, the problem that we have in Serbia with respect to our tax legislation is that we treat, under Serbian tax law, a contribution in kind into the capital of a legal entity that is treated as a taxable event. Just as it would be as if a sale occurred. And these business reorganizations that are not covered by the company law as statutory mergers and acquisitions, so that a contribution to capital would not qualify. They're fully taxable. Now, in 2019, the effective tax rate on capital gains generated in this fashion was lowered from 15 to 3%. But in most European countries, this type of business reorganizations would not carry a tax burden. There would be a tax deferral. So what happened what was introduced as of 2022 is that there's a possibility of an exemption from assessing and paying capital gains tax in case intellectual property is contributed into the capital of a domestic company by its resident shareholder. Now, why just a possibility? The taxpayer can opt out of this exemption. Why? Because to use the exemption, you need to, first of all, the value of the shares must be asserted by a certified appraiser. So you need to engage a certified appraiser to have him appraise the value of the shares. Plus, 2 additional conditions must be met for the exemption to apply. The intellectual property must not be disposed within 2 years from its contribution by the entity to whom it's been contributed. And within the same 2-year period, the IP may not be transferred wholly or partially to a related party under conditions which are not at arm's length. So transfer pricing rules need to be adhered to properly. So for those taxpayers who are not ready to meet these conditions, they can opt out not to. They can basically choose to pay the 3% capital gains tax. And for those who can meet these conditions, there's an option to exempt the capital gains from taxation. Plus, there's an additional incentive introduced into the system wherein you don't have a pure deferral of tax. You actually get a step up in basis. The acquisition value of the shares for the entity which contributed the IP becomes the market value of the IP at the moment of contribution into the capital of the company. So provided you can use this exemption, you get a step up in basis, and any increase in value from of the IP from the time it's been generated until it's been contributed into the capital essentially avoids any taxation. So this is a measure which essentially analysis showed that domestically held intellectual property is not particularly organized, that there's quite a significant need for restructuring, corporatization, for reorganization. So this measure is intended to make it as tax efficient as possible to conduct these activities. From the perspective now that's it. That's what happened at the level of corporate income tax. Now bear in mind that already significant exemptions and incentives have been introduced a few years before. At the level of personal income tax, there are some 10 measures that there are more, but some 10 measures which go in line with this need to structure to help Serbian economy in its transformation with respect to the knowledge-based economy goal. Three measures I'll just mention, I won't go deeply into them. So the non-taxable amount for salary taxation has been raised from 18,300 dinars to 19,300. The rate on pension insurance contribution has been lowered by 0.5%, so from 25.5 to 25%. And this lowering came at the level of social security contributions, which are paid at the expense of the employer, thus lowering what we call gross two, so the total cost of labor. And finally, and that's the last point, the Serbian Ministry of Finance introduced measures which now clarify completely the tax treatment of corporate reorganizations at the level of individuals. In the past, this was clearly regulated at the level of legal entities, but that was a legal void at the level of individuals, which created notable problems. So this was regulated as of the 1st of January this year. Now, from the perspective of what we will be talking today, 7 measures actually are important. So we have an exemption from the liability to pay tax and mandatory social security contributions in the case of innovative startup owners who are employed by their actual startups. There's an extension of the transitional regime from employed sole proprietors and the introduction of a new window, new opportunity for those who have not used it yet. There's a new employment incentive. There is an exemption from payment of tax and mandatory social security contributions for salaries of employees engaged in R&D projects. Exemption from the payment of annual personal income tax for taxpayers under the age of 40. Extension of the incentive for newly settled taxpayers to cover annual personal income tax. And also at the level, the same measure that we just talked about at the level of corporate income tax was extended and introduced at the level of personal income taxation. So the possibility from assessing and of exemption from assessment and payment of capital gains tax stemming from the contribution of intellectual property into the capital of a domestic company by a resident shareholder. So now we'll go more deeply into these 7 measures. The level of stimulating innovative startups in Serbia, we have had an incentive for the last couple of years, which basically exempted from the employer, the innovative startup, from the liability to pay salary tax and mandatory social security contributions that it withheld in the case of salaries of their owners. Now, the exemption was valid for 36 months as of the date of the startup's foundation, and it applied up to 150,000 dinars per month gross. Any amount of the salary of the startup owner above this amount would have been taxable. Now, the problem with this exemption in the past was that it was set in time, it was limited. And basically, the limitation was for 1 year, and then it was extended to another year. But this incentive should have expired as of the 31st of December 2021. So all innovative startups that would have been established as of the 1st of January of this year could not benefit from this incentive. What was done was that this time limitation was deleted, it was abolished, so this is now a general incentive into the system. It applies without any temporal limitation, so it applies to startups founded 2022, 2023, whatever, and it applies under the same conditions. So 36 months as of the date of the startup's foundation. It applies to the owners of startups. An owner must, to qualify as an owner, you must hold at least 5% of the shares, and the exemption applies up to 150,000 dinars gross for the salary of each startup owner. Now, The transitional regime from employed to sole proprietors was extended. Essentially, what was done in the past, when the independence test was introduced, the independence test, the desire was basically to stimulate that all those people who were presenting themselves as sole proprietors but were essentially dependent agents, so essentially employees, that they actually entered the employment relationships with the companies who were engaging them, but to also with this independence test, the intention was to provide, to make a cushion for this change, to not make it as harsh as it could have been. A 3-year transitional regime wherein you got an exemption from payment of salary tax and mandatory social security contributions for a period of 3 years. Now, immediately when this measure was introduced, this was essentially a sort of a compromise. Particularly the Serbian IT industry, was divided. Some were using this mechanism, this way of essentially aggressive tax planning by hiring personnel, not by way of employment contracts, but as sole proprietors, as independent service providers. Other companies that were not able to use this mechanism were protesting heavily because they were at a disadvantage for them to find the right talent at a competitive cost. So essentially, this three-year transitional period was introduced as of 2020. It basically coincided with the corona epidemic. So very soon the question was raised, what to do? What to do after these 3 years expire? So something that's not very common in our surroundings, but is I think quite nice, happened. The entire Serbian IT industry, all of its associations, sat down and they made a compromise. And the compromise is basically what we have now in the law. The compromise is that the transitional regime is extended for another 3 years to 2022, but it applies only to those persons to those legal entities who have a maximum of 30 employees as of 31st December 2020. What does that mean? Well, that means that you look that this date is intended to prevent any form of tax planning, because it basically sets the date to you look back in time to see whether you qualify or not. If you had up to 30 employees, you qualified for the exemption. If you don't have 30, if you have more than 30 employees, then the transitional regime is no longer applicable to you. So this is essentially is an extension to help the smallest part and the most vulnerable part of the Serbian IT sector to have another extension of this beneficial regime. However, the benefits of the exemption are lowered, so they're to 50, 40, and 30% exemption from taxes, and 75, 65, and 55% respectively for pension and social security, pension security contributions. Now, bear in mind, effectively 75% exemption of pension security contributions equal to a 50% exemption of all social security contributions because of the weight of pension security contributions in the total mandatory social security burden. Mechanisms to limit the unfair competition, wherein these small companies could actually target the workforce of larger companies that are not able to benefit from the extended transitional regimes, have been introduced. And also there is another system, and that's essentially when the independence test was introduced, measurements have been made, and essentially around 80 to 85% of those who posed as sole proprietors but were actually dependent got employed. At least that's the numbers we have in the IT sector. Plus, the Serbian IT sector managed to generate another 800 new jobs. Now, as because of the COVID epidemic, and perhaps because some people were, not sure whether or not they've qualified for the independence test, and maybe some just ignored it. Around 20 to 15% of those who do fall the independence test and who could have benefited from the transitional regime stayed out of it, and now the issue arose what to do with them. So a new window has been opened to make the transition, as close to 100% as possible. From the 1st of January 2022 until April 30th, 2022, for these people to re-enter the transitional regime. But for them, because they're late, and they have been late, their exemptions are 3 percentage points lower from the general one as a form of penalization. For those individuals who are remote workers, who cannot be employed by their foreign clients, but who do fall the independence test, a possibility to set up their own service companies, legal entities, and employ themselves in them, and thus benefit from the transitional regime, has been also extended. This has been used as a mechanism by those remote workers in Serbia so far. Now, this new employment incentive that has been introduced shows that the primary interest right now is actually on talent retention and helping Serbian businesses keep Serbian talent in the country. So essentially, what is introduced is a 70% exemption from tax and social security contributions. Essentially, so effectively, that's a 70% exemption. What you actually get is a 70% exemption from salary tax and 100% exemption from pension and insurance contributions. Is provided for salaries of newly employed individuals who are employed from within the period starting 1st of March of this year until the end of this year. So this incentive is provided to those who are employed in this period. The incentive, this exemption, can be used until the 31st of December 2024. So for those who get hired in March, that's an almost 3-year 70% exemption. It applies to such an employee may not have been insured, socially insured, in the period from 2019 until the 28th of February 2022. So the primary focus of the incentive is actually to students exiting Serbian universities, basically. And the third condition for the application with the exemption is that the gross salary given to the contracted with the employee must be above 76,500 dinars. So essentially, the mechanism of the incentive functions in a way that the employer is capable of providing an average salary to his employee at the effective cost of the minimum wage without the incentives. So you are being enabled to provide as high as possible starting wages at the lowest possible costs for the employer, because the higher starting, so these people are usually people without any experience, while thus the period of almost 3 years, so that they can generate qualifications and expertise that will make their salaries feasible for the employer. So, but since the young and those exiting the universities are most prone to immigration, providing them with higher salaries is a reasonable tax measure intended to stimulate them to stay in the country and find employment with Serbian employers who are, through this measure, being made more competitive on the global talent market for these people. Primarily, what we are targeting here essentially are college graduates, because of the high starting salary. Those whose departure from the country, immigration from the country, hurts us the most. Now, in the transition to the knowledge-based economy, this is probably the most relevant measures, and that is that. So please bear in mind, at the level of corporate income tax, since 2019, you have in the Serbian tax system a double R&D deduction. So every R&D expense you can claim in a twofold amount for the purpose of corporate income taxation, plus your income from IP is taxed at the rate of 3%. And since you get a double R&D deduction for unsuccessful R&D projects as well, effectively, if you're very IP intensive, your corporate income tax rate can easily go to zero. So you have no corporate income tax liability, because not only will your successful R&D projects be taxed at the level of effective tax rate of 3%, you'll still get to use the double R&D deduction for unsuccessful projects, leading you to the possible theoretical zero corporate income tax burden. Now, in addition to this, you now get, as of 1st of March 2022, a new exemption, new R&D incentive, wherein the employer is exempt from the liability to pay effectively 70% of taxes and Social Security contributions. Again, 70% of salary tax exemption and exemption from the payment of all pension insurance contributions. The employer withholds this amount but is allowed to keep it. For individuals which are direct, for employees which are directly engaged in research and development projects, in proportion to the amount of time they spend working on this project relative to full working hours. So essentially, you get at the level of corporate income tax, the level of the double R&D deductions and the IP box, but now at the level of personal income taxation, the employer is allowed to keep 70% of withheld taxes and mandatory Social Security contributions, wherein the government pays in the full cost of pension insurance on behalf of the employee, enabling you to provide competitive salaries to those highly qualified employees that are needed in the R&D sector. There is one difference between this incentive and the one provided at the level of corporate income taxation, and that is that at the level of full corporate income taxation, you are allowed to use the double R&D deduction not only for employees, for the salaries of employees who are directly involved in the R&D project, but also for those who do oversight activities and management activities for the purpose of the one now introduced at the level of personal income tax and mandatory Social Security contributions. The employees must be directly involved in this project, so oversight and management doesn't qualify. One important thing to note, well, two important things to note. One is that for R&D to be conducted, the actual intellectual property that results from the research, or the intellectual property or the product which is being further developed, must be owned by the entity conducting the activities. So service companies don't qualify for any of these research and development activities. It is companies who actually hold the IP that do qualify and who keep the ownership of the IP. That's one thing. From the compliance perspective, the corporate income tax incentive, the double R&D deduction, which is closely connected to this one that we are just talking about, is being now applied by several hundred Serbian taxpayers. So what was done was that, their compliance problems were analyzed. And we saw that basically the incentive functions quite well, quite smoothly. And actually, for the purposes of compliance and this particular incentive, the ministry, which is yet to introduce bylaws until the beginning of March, will heavily rely on a system which has been proven to be working. So that's one positive as well for this incentive. Now, this measure that we will be talking about was designed particularly in consultations with the Serbian business community, which indicated that one of their biggest problems is retention of high qualified professionals who are being specifically targeted by foreign employers. and that they need help in help in keeping them in the country. So this is an incentive which is benefiting the employee completely. There is no way that the employer can actually benefit from this measure financially, but they can benefit by virtue of talent retention by helping qualified people stay in the country. And those most prone to immigration are those under the age of 40. So in case of these individuals, what was introduced is what can be colloquially explained as an exemption from the obligation to pay the complementary annual personal income tax. Now, that would just be colloquial. What was done was that the non-taxable threshold, which for everyone is 3 average gross annual salaries, in the case of taxpayers under the age of 40, has been raised from 3 to 6 average annual gross salaries, but only for taxable salaries, income from business activities, or income from intellectual property rights. So, for example, rentiers can't benefit from this exemption. And essentially, if you're younger than 40, until your net salary, monthly salary, if employment income is your only income, until your monthly salary reaches around 5.5 thousand euros per month net, you will not be liable to pay annual personal income tax, which for such high salaries means a bonus of roughly around 3,000 euros. Plus, there's been some psychological analysis involved here, because the annual personal income tax is for qualified professionals the most hated type of tax. That's the one they have to pay on their own. It's not withheld by the employer, and it's a tax which is viewed as unfair because it targets the higher middle class. It doesn't target the wealthiest sections of the society because of certain peculiarities of the Serbian tax system. But anyhow, this is a measure that was designed basically to help talent retention, and essentially those companies that were behind this measure instructed their HR departments to send what can be described as a love letter to their employees, stating basically, we fought for you and we got this for you because we value you and we want to keep you here with us. I already mentioned that we that's Article 15V of the Serbian personal income tax law. We have a rule basically providing a 70% exemption from salary tax and mandatory social security contributions for a period of 5 years for a newly settled taxpayer who is high qualified, newly settled taxpayer who gets employed by a Serbian employer and who settles here permanently. Now, this incentive applied only at the level of salary tax and mandatory social security contributions, but in the first instance, it did not apply to the complementary annual personal income tax. Now, this has been amended, and now what we have as of this year is that these individuals pay the complementary annual personal income tax only on the amount of taxable income for the purposes of salary taxation, and not on the entire amount of their salary, as was the case in the past. And finally, I mentioned that the same exemption as the one we talked and in the beginning, for the purposes of corporate income tax taxation, capital gains from the contribution of intellectual property into the capital of a resident Serbian entity, there's a possibility of their exemption in case they are contributed in kind into the capital of a Serbian resident entity, while same conditions apply. So appraisal by a certified appraiser of the IP, and what you also need to keep, the company into which the IP is inserted needs to retain it for a period of 2 years. It cannot dispose of it in the period of 2 years. Plus, if it transacts with related party, it needs to do so under arm's length conditions, or otherwise it loses the exemption. The right to the exemption is lost. So that would be the presentation of the new tax package targeting the knowledge-based industry in Serbia that was introduced as of this year. And now I think we can stop the sharing of the presentation and turn to your questions, which I hope I will be able to answer. Thank you.